Good morning, everybody. Do I need a little bit more light on me? I need a little bit more light on me. That didn't really work, but okay. I don't want to shock you with too much of me. Let's just keep it dim for this morning. It's Friday. We've been through another tough week with flinches and knee-jerk reactions to things. Of course, we see the market today. Let me know, everybody, if you can hear me and if you can see my Turbo Income slide. Good morning, Upchuck. Good morning, Cool Hand Vic, CEB, P. Jones, Vicky. Always wonderful to see you here. Terrific. No slide or screen? Okay, that's good. That's why I love having you guys here. Number one, it wouldn't be much of a show without you. And number two, you keep me running things smoothly. Okay, hopefully you guys can see that. I will put that in there. Green Bay, Ray and Shane are in the house. Wonderful, wonderful. We have the S&P grinding towards 600, right? We got 600 this morning, the SPY, and that's what I've been talking about. I just thought, we're just going to keep grinding up. I'm going to show you why. We got the Microsoft trade. You're welcome, Surf Dance and Hogan. Yeah, we've got some interesting trades on in Turbo Income. The NVIDIA, we've got a terrific turbo trade that's actually on. We got into another one that kind of took a little heat after the earnings, but is starting to shape up again. Of course, if you guys have been following me, I really like that sector. And I'm going to show you some kind of interesting charts today and some exciting things that I think could be brewing out there. And if you've been listening to me for the last 3 weeks to a month, you probably have an inkling as to what that is. So again, if some of you don't know me, I'm Hans Albrecht. I'm the director of income trading at Option Pit. So why income? Well, I've managed $1 billion in income strategies and option strategies, fund manager for around 700 million in option overlay funds. So cover call type funds, creating income against those underlying holdings. Very, very popular types of funds. When I started managing those funds, probably about 5 billion in AUM, assets under management, in those kinds of funds. Now we've got well over 100 billion. And again, we see there's another product. They're issuing these Bitcoin covered call funds, so trying to generate income. Now we have a Bitcoin income sleeve in Turbo Income. You don't just get one kind of trade. I can't help myself. So you've got a whole bunch of other different trades, cash machine trades, etc. For all various kinds of risk tolerances and capital usage. So, some trades use $800, $1,000, and some people use more than that. Some trades use more than that. So all kinds of fun things that you can be doing in this kind of market. Option pricing has come down quite a bit lately. And that's the kind of stuff that I look at, right? Like Andrew and Mark and Leisha, everybody looks at the markets, but having that extra little bit of depth in options and volatility really can give you that extra little bit of edge. And we often talk about that edge. There's nowhere like Option Pit. So we're going to talk about the good, the bad, and the maybe today. The good is, I think we keep rallying. It's not good, I guess, if you're bearish, but for me, it's good. I think we continue to climb that wall of worry, and we'll kind of show why that is in a moment. So we can see that the option prices have been kind of coming down across the board, right? So we had that big hiccup, of course, in April. If you were lucky, I have one student actually who was away for that entire period. They got out of the market, and I was like, wow, that was pretty lucky. And they kind of came back to sort of pick away at the market. So that was some good fortune there. If you avoided the first part of that, unless you owned a whole bunch of puts and things like that. So we see things continue to contract. We had those ATRs, the average true range. You can get that on any charting software, stock charts, bar chart, etc. Look up the ATR. That is a wonderful thing to look at. It gives you an idea of not just that close to close movement in markets, but the ranges, right? Sometimes we get in market environments where we close on the high, we close on the low, and it's just kind of that close to close movement that is really kind of driving the bus. Sometimes we get markets where we're moving around all over the place. We open up 50, we drop 100 points, we rally again. So it gives you kind of an idea of, you know, the movement, the range that you have versus you know, the sort of close to close. So I think it's good to use in combination with the realized volatility, which is close to close. And then you've got Bollinger Bands. There's all kinds of volatility metrics out there. You may not think of it as measuring volatility, but think of a Bollinger Band, how it just compresses. And then you notice that at some point it just goes boom, like an elastic. It just kind of breaks and flies open, and then the stock starts moving again. Those are really, really cool things that help to inform the kinds of even just equity strategies, but most certainly option strategies as well. So look at these ranges come down and volatility levels. When I say volatility, I just mean option pricing, right? So option pricing coming down, credit, currency, gold, oil, rates, and of course, equity right back down again. We see the VIX down to 1730, down $1, down 1.16 today. And that's pretty close to the lows that we've seen lately. We had a little hiccup there, and now we're back down again. And let's look at one of the things that we like to look at as option traders, because option traders are volatility traders. Like it or not, you're a volatility trader, right? When you buy options, you better get some volatility because you paid up for it. If you're an option seller, you better hope we're not heading into the eye of a hurricane, because that's not where you want to be when you're an option seller. So as I'm going to explain soon, we look for stability. We as income traders, we look for stability, because stability, signs of stability, durable stability is going to be very, very useful in what we do. Because, as I always like to say, half the battle in the option income game, is staying out of those, avoiding those piles of you know what, as much as you can. We can't always avoid them. And that's why we have things like a ripcord strategy that gets us out at a certain point if things are going against us. But what really helps is doing the work, doing the filters, doing the scans, looking at the right setups, looking at the right sectors, not fighting the market, and getting yourself into better situations, because that's going to pay off over time. So let's take a look. We've got this amazing, as I've been saying for a long time, I think the pain point is up. We just keep pushing up. We keep shrugging off these little bits of negativity. Again, yesterday, a lot of drama there. The housewives of the White House, as I call it, big drama out there. But what we've seen lately is this breakout of mega caps again. So what do we have leading the market? There's other stuff going on too, but we have mega caps. We have the Mag 7 coming back to life. And really, ever since we broke through this trend line here, we really have been kind of pushing higher. And I think that AI narrative that I'm very, very fond of, if you guys have been following me, is going to continue to push. Now, why MAG? Well, to some extent, they're the balance sheet heroes, as I like to call them. So when people are a little bit nervous, they kind of like companies with big cash hoards and very reliable businesses that continue to generate that recurring revenue, right? That those bills that keep coming out of your PayPal account, your credit card account, like clockwork, those companies specialize in that. Your cloud, your everything. Are you ever going to be able to get rid of your Amazon photos? No. How could you? What are you going to do, right? These guys have got you. You're going to get rid of Amazon photos? Well, you could put it on your on an external hard drive, and then, you know, hopefully your hard drive doesn't die. I've had that happen. Got a whole bunch of stuff on a hard drive, and then one day it doesn't start up for you. So, you know, those things are amazing. Netflix's with their recurring revenue. So recurring revenue is amazing. That's one of the reasons I've liked Hood lately. They are really expanding that recurring revenue. That gold program that they have gets you in there, right? When you have a membership fee or a kind of a way to get people in, like point systems, right? You know, point system at the gas station. You just kind of want to stay with that vendor, because you're starting to become relying on their ecosystem. So look at this. Look at the MAG, surprise versus consensus. Yowza, right? Versus consensus. Maybe consensus came down, but they're doing great, right? Magnificent 7 PE. So is there room, right? We're going to ask ourselves, is there room? We've had a big bounce back in some of these things. Microsoft 350 to 450. We've had a big bounce back. NVIDIA's rallied 50%. Do we still have upside? Well, look, there's, compared to how this industry can kind of inflate, there is room, right? So that's why I like to look at these relationships. Things can be kind of expensive, although I don't think they're that expensive given the backdrop of what we're facing. And look at what they're delivering. Cumulative change in consensus earnings estimates. The rest of the market, the S&P 493, crap. Magnificent 7, just fine, given the backdrop. I think CapEx just keeps going and going and going. And we've got the forward PE ratios of the S&P with, here's your MAG bouncing back. And then here's your S&P, forward PE, and then X MAG 7. So the rest of the market looks kind of interesting too. So if my sort of roaring 20s narrative kind of continues, I think there's room in areas that have secular strength, which is important, right? Good stories drive stocks. We see that all the time. Everyone's like, well, why is this stock going bananas? Why is it going parabolic? It's overpriced. It doesn't matter. It doesn't matter a lot of the time if the storyline is there. Costco is very expensive, but the story is exceptionally strong. And so it keeps going. So we can see here overall, remember, I like to also talk about positioning out there. What do I keep talking about every week? People are not in this market. Retail has come back into this market. Institutional money is not quite into this market. And I guarantee you, they are looking at S&P 6,000 today going, holy moly, we may be about to underperform in a massive way. So I think I've talked about this before, and I might as well keep talking about it because it's really, you have to understand what's driving, what driving forces there are out there. And so it could keep the VIX under control. So the VIX is the S&P 500, right? How nervous are people about S&P 500? Well, at VIX 50, they're pretty darn nervous. At VIX 17, they're a little nervous. We still have a little bit of that sudden tweet syndrome, as I like to call it, right? The market has sudden tweet syndrome. It's ready for, it's nervous about a sudden tweet at any moment. And that's keeping us at around 17, whereas we probably should be a little bit lower. But for now, okay, we're gonna keep it up around there. But we can see that the term structure is very happy. Here's my little happy guy. This is the kind of market, you'll see Andrew talk about this and Mark, this is the kind of VIX futures curve. You don't have to know too much about this, but basically when it's in this nice contango shape, it means that people are less nervous from a durability standpoint. Doesn't mean the VIX can't shoot up 3 points, but when we shot up the other day, the futures curve, I don't think really changed all that much. So the futures curve sometimes says, meh, the VIX can kind of get a little bit nervous shorter term, but the VIX futures curve is one of the things that we watch because that's going to give us an idea of, is this problem a little bit more durable? And at times it is. Right now, we're seeing this picture is synonymous with what we're seeing out there, which is we drop, we bounce back, we drop, we bounce back, we sell off a little, we bounce back. If we sell off a lot, things can change. Now, I showed this last week. Here's TLT, MTI not happy. Today, sorry, I've got a different chart, different software platform showing you this one, but today we're starting to get back to yellow. That's interesting. I've actually been adding exposure to TLT, some upside calls in TLT. I don't think they're that expensive. And I feel like we're a little bit closer to the bottom in the top in rates and the bottom in bonds. So I think it may not be the absolute bottom, but when I see this sort of action after a lot of nasty red, which is my MTI, which you get with Turbo Income, when I see that and then I see a breakout and I start to see some yellow, if I start to see some green, I'm going to add to this trade, right? Good traders add to good trades. Good traders stay away from difficult situations. Now, yellow, I said here, when it's yellow, let it mellow for income. So this is where you can do an income trade. It's not yet that kind of sort of escape velocity type stock, and MTI can apply to anything. So it's not escape velocity, but it's definitely kind of income-y. So, you know, doing something like a vertical, like a credit spread, something like that, just kind of basic sort of income strategy. When it starts to look really good, when a stock starts to look great, then we're going to get a little bit more serious about it and do that turbo trade. And we have a turbo trade in a number of names right now. I mentioned the NVIDIA doing very, very well. So let's take a look at, I want to show you guys some MTIs here on some interesting names. So market kind of hanging in there, pretty impressive. We had the Broadcom earnings. It's down a little bit, but it's, you know, it's had a hell of a rally. And I really like that kind of area. I think semiconductors they've had a great run. I'd be looking to probably add some exposure. Look at my MTI, super, super green, looking very green and not mean, looking green and happy. I think this is kind of a nice setup for me. When I see a lot of positive action from the MTI and I get a pullback after a breakout, that gets me perky. That gets me pretty perky. So, but I'm watching that. I'm not like, I want to make sure we're getting that stability. So for example, if I look at Uber, where we have a position, we see it came down here to this support, this breakout support. I'm not super excited about getting more aggressive. Now that we're kind of starting to rally again, I want to start seeing a little bit of yellow here. That's going to give me a bit more confidence that this turnaround is actually happening, right? So nice breakout, pull back on Tesla and robotaxi and all that stuff. So people always nervous about those. It's a very competitive environment. And now it's starting to kind of get a little bit more constructive, but I want to see a little bit, I want to see a little bit of a better picture here before I start to get a bit more constructive. Now we have a trade in here, but I need to do the second leg of the trade of the turbo soon. So I want to see a bit of yellow. We can see option pricing starting to pop up again. That's really nice. Let's look at Hood is one that I've loved for a long time. Look at that, tons of green in there. We keep looking for a turbo. We had a fantastic win down around here, 40% or something like that. But now, you know, kind of looking for that next entry point. It may be going into one of the indices. So it could be a bit of a sell on the news on that. So I'm a little bit hesitant at this point. Costco pulled back. Jose mentioned Costco. Yeah, down $40. Well, I mean, I think once you start getting growth going a little bit again, sometimes they cycle out of the sort of, you know, almost safety type plays, right? Costco is not inexpensive. So I'm not saying it's like a cheap healthcare stock or utility stock or something like that, but it's a place where people have hidden because of that wonderful recurring revenue, that, you know, they're fantastic allocators of capital. They don't try to do anything that they don't know well. They just keep opening warehouses and everyone loves to save money. So it's kind of a place to sort of hide, as well as clearly a place that you can make some money. So I'm happy there. We actually have an income trade on Costco. So I'm very happy with that position. And of course you can see Microsoft new highs, Meta all the way back, $230 back from the lows that we saw in April. That's why we always talk about quality in turbo income. So again, sometimes I show this, I go, you know, stocks with high free cash flow margins outperform other stocks by 18% a year. Mic drop, right? Cash flow. Stocks with high return on invested capital. How do they do over time? They blow other stocks that don't have higher ROICs. They blow them out of the water, right? So quality is where we start with our first scan, and then we move on from there. And that's what, this is actually a very, very old slide. I haven't changed it at all. This is, you know, you've got these great companies, great moats, Netflix, Costco, Microsoft, Visa, Amazon. I literally haven't changed this slide in years. And guess what? These are the stocks that keep doing well. Amazon maybe could be, you know, it's done well. I think it continues to do well. I love Amazon. So I think it's kind of one of these names that it still has room to go. I think it's going to really benefit from AI. These hyperscalers are in a very good position to take advantage of that. So let's keep taking a look at some stocks here. before we run out of time, we're going to look at NVIDIA, where we're positioned. I think we continue to push up. I think the pain point is going to be up. And guess what? Hedge funds, I don't have the chart with me, but hedge funds are not in this market. They were so out of this market. If they ever need to start getting back in, that could be fuel to the upside as well. And they have really soured on MAG. So I think if these charts continue to do well, you're going to see a bid in there from some serious money. So I love it. We've got this beautiful MTI green here, which really supports our turbo trade right now. And if it gets up into the 145, 146 range, I think we're going to make new highs this year. I'm feeling really good about that. I've got another chip stock that I am very, very fond of, and we got something brewing. Right. So I've been covering technology, AI, all these areas since about 2016, 2017. And I was recommending people buy NVIDIA way back then. I wish I'd listened to myself and bought way more. But we have got something brewing for a special situations trade that's going to be coming up surrounding this AI narrative. And this is a stock I really, really love. This is a chip maker. You guys could probably figure it out, but it is a stock that is in all the right places, but under under the radar a little bit. They are going to get into a very big booming area as we sort of move from training into inference into the Internet of Things, which is basically devices of all kinds infused with AI, right? So over time, we're going to have AI basically everywhere we look. And I think, these kinds of companies are going to do really, really well, and they've underperformed. So I think that's kind of an interesting one. That is got a very good chance of being part of the special situations trade, which is going to probably evolve into a product that I think could do phenomenally well over the next few years. Let me show you one very interesting chart today. Okay, so again, you guys know I've been pushing this. This next leg of AI is going to be gangbusters. Look at what ARK is doing. Cathie Wood, I'm not saying she's the best. I'm not saying she doesn't own a whole bunch of poor quality stocks. But what I am saying is this next leg could very well come with a buy everything under the sun. Expensive stocks, crazy ideas, moonshot ideas. This is starting to go a little bit today. I have it in my AI Leaps portfolio. It is starting to go, and I think that's a sign. We've got a whole bunch of yellows there. If I start to see this turn green, I'm going to get much more aggressive on it. She took it on the chin, I know, but every now and then, be aware that there could be a resurgence of an old trend. She absolutely has taken it on the chin. But I'm just saying, like, if you look at, I never trade SOXL, MSTX, very, very, very rarely. I haven't touched SOXL in probably 9 months. And I've actually initiated a position. I think if it starts to get going, it's basically based on the SOXX. We have a trade in turbo income on the SOXX, right? We're not going to trade SOXL. It doesn't really fit the sort of parameters, but we also do kind of unofficial trades. So we'll see. But I've got some trades on in this thing, and this is starting to really shape up. Now there's the macro environment, and semiconductors have had a good run. So there's always that. So we're kind of, we may be sitting around, but what I do like to see is that we're starting to get more green. If we get kind of 4 or 5 days of green, it's going to start to look quite interesting to me again. So these are the kinds of things we look at. We really kind of use that MTI as a sort of very important ingredient. I wanted to talk about volatility risk premium today, but you know what? I think I'll leave that for next time. I wanted it to be kind of the teaching moment, right? I got to come up with a catchy name for that. But anyway, so right now we're doing our scans. I just did one focusing a little bit more on the growth side of things. So we get this sort of fundamental scan. All of these go into our lovely little filter via a number of programs that I use. Then we get technical. We want to make sure it's a good stock that is acting well, right? So good stocks that don't act well are not that much fun. So we get them through the filter and we start to move them down to that one stock per week. And again, I can't help myself. We've got to, we always have more than one stock. Robin says, when we get through this current cycle, the company's ARK targets will likely be huge beneficiaries of that trend. That is exactly what I'm saying, Robin. This is not something you put 50% of your portfolio in. This is not that kind of thing. But it is a name that I'm chipping away at, because I do believe that if this becomes, if the theory on this next leg of AI starts to play out, it's going to be a kind of a .com again. It could be a little bit more like a 2021, where kind of everything just goes a little bit bananas. But the core of my AI portfolio is going to be the Metas, the Microsofts, not Google right now, Tesla, despite recent events, some very, very solid core holdings. And then you sprinkle in these other things that can really give you that massive amount of alpha, right? That alpha, which is just the performance outside of what that's where your MTI will come in on ARK. Exactly. So if we start to see a little bit more of that, I mean, when I see the MTI combined with technical breakouts and volume, if I start to see a little more volume here, I mean, that's the best of all worlds, right? I don't really want to get into an MTI if the chart still looks so-so. I mean, it's probably not going to give me a green signal. So that's the nice thing about the MTI. It's not, it doesn't really want to get involved. You know what? I think, good question, is Microsoft fully valued? Well, it's had a heck of a run, but Microsoft is in all the right places, right? Versus Google, which is just kind of, you know, they're having to cannibalize their existing high margin 60% of their revenue business in order to chase something where they're an also ran. Google is just, you know, Claude is apparently the best AI. And then somebody says, you know, GPT is the best. And then it's Perplexity. And then now Google has gone from having this moat, confident moat, to basically sitting in a puddle. It's a puddle. They're competing with everybody else now. Now they have the suite, the productivity suite. That's very important. Microsoft, Grok's the best. Yeah, Grok too. I forgot about Grok. Microsoft doesn't have that problem. Who gives a crap about Bing? They are able to focus on delivering AI value to their ecosystem, their suite that nobody can get rid of. You're not going to get rid of Office. So I think that's what people are really starting to bank on, is that you know, they could probably start raising prices, because I've listened to some very smart people say they would pay 50 times as much for what AI is doing for them right now. Let that sink in. Schmidt, old CEO of Google, said AI is underhyped. Can that be possible? Can it be underhyped? It is. It actually is underhyped, because this is the stage where it starts to kind of infuse itself throughout the economy, everywhere. And it's going to be a panic for people to get involved. So that kind of gets me a little bit excited. And so for the core, you got to have the great stuff, and then a little bit of, you know, sprinkling a little bit of other stuff like that. Like, for example, NBIS. So NBIS, we've got this in our AI Leaps portfolio, in my AI Leaps portfolio. And my timing was unbelievable. I got in over here, and this is kind of another version of CoreWeave. Now, this is very spec. It's got sort of, you know, it's got ties to old Russian company Yandex and things like that. And you know, sometimes overseas, you just never kind of know what you're getting. But a lot of that's been cleaned up, and it's a sort of much cheaper version of CoreWeave. So I think that's very interesting. The prospect of sort of making AI available almost as a sort of, you know, software as a service, that's going to be kind of pretty big. The next phase will be companies in different sectors accelerate various AI technologies into the business model. 100%. Like I said, that one guy that I listened to, a very, very smart guy, he said, I get everything done that used to take me a week. I get it done by Tuesday. just amazing potential out there, right? What it means for jobs will have, remains to be seen. But I think there's this opportunity for the market to grasp that. Oil, not really. I think they're going to keep pumping it. I think they're going to pump. I'm not a huge fan of oil, unfortunately. I think there's going to be, part of my TLT idea is I think there's going to be deflation. I think there's going to be, there won't be nearly as much inflation as people think. The Fed is going to be, Powell's going to be watching employment. I think employment is going to be the big thing over the next few years. That could give the market a bit of a scare. Inflation, I don't think that's as big an issue, not to minimize it, because I know it's very painful. I hate paying up, but I think there's going to be, let me give you an example. So there's a stock called Upwork, Fiverr. I got out of a Fiverr position. Think of what this company does. It's freelancers doing document preparation, copywriting, designing, PDFs, PowerPoints. I mean, there's a whole bunch more to Upwork than that. But think of what AI is going to do to all those kinds of things. It's going to compress pricing. There's going to be deflation in many areas of the economy that are going to help lead us to more productivity. So there's going to be, unfortunately, a lot of pain in certain areas. It's going to crush that model. Yeah, look at Chegg. Isn't that the tutoring company? I mean, they're going to go out of business. AI, you can now tell AI to be your child's tutor. It's going to learn everything about your child's math skills. It's not going to forget a single thing. You don't have to go anywhere. You don't have to drive to Mathnasium to get them help. It's going to spit out homework, sheets. It's going to focus in on areas that he's really struggling in. You can say that again, Matt, man. It is going to be very scary. I have some software friends, one guy who actually owns a company with 100 employees in kind of the software space. And he said, I'm extremely worried. He's like, I don't know if my business is going to be around. Can you imagine 100 employees? He's like, I don't know if my business is going to be around in a few years. The world is changing, folks. And I think one way to combat that is to own the things that are creating the disruption. Now, it's not always going to be easy, right? There's going to be, like I said, moats are going to be disappearing. I think chips are interesting, right? Because those are the picks and shovels. AVGO kind of disappointed a little bit, but it wasn't that bad. There are going to be the picks and shovels companies. So we're going to have to go out and figure that out. And so you get part of that in Turbo Income. So guys, I don't want to go too long. I'm sure somebody is telling me to stop at this point. I'll probably get the hook. If you remember the hook on stage, I'll probably get that at some point. And so we're going to leave it at that. If you want to get involved in Turbo Income, it is fantastic. We have done a lot of fantastic trades. Let me get my thing back here. Everyone loves it. The turbo trades, the income trades, there's something for everybody. And of course, I'm in the chat room answering questions and always looking for those great opportunities for you guys. So I hope you guys enjoyed it this morning. If you have any questions, go ahead, and then we'll, any hope for Intel. I mean, they have that onshoring kind of thing, but they're horrible. I mean, they're horrible. It's cheap if you look at the pieces, the parts and all that. Like, I don't think it gets too much lower. But they really are like a crack dealer that is going out of business. It's quite incredible. You're very, very welcome. Yeah, there's, you got to be careful out there. So that's why, in SOX, I mean, you probably can't go wrong with NVIDIA because they do training and inference, and they have they have CUDA, that incredible operating system software. They're software. People think of them as GPUs, but they're really software as well. And that keeps people in the ecosystem. Remember, it's like these businesses that are like Robinhood, like BMW. They get you into the 1 series, and then they move you up through the different series as you make more money, as you do better in life, etc. They want to get you in early. And there's been so much developed for CUDA and NVIDIA that's becoming a bit of a lock in some ways. Now that could change, sure. I mean, you can port CUDA to AMD, for example, but it's not the same. And why would you bother? Except AMD GPUs are cheaper. Anyway, okay. Thanks, WACEB. Everyone, join me for Turbo Income. Somebody just threw it in there. In the, I don't think Christian's around, but you can see right on here. Check it out. There are many ways to get involved, different price points, and you're not going to regret it. So thanks, everybody. Have an awesome day. I know you probably have to get to some other stuff, and thanks for coming, and we'll chat later.